Hi, my name is Emmanuel. Welcome to Masters of Industry, a program brought to you by Business Elites Africa. On today's episode, we spoke to the co-founders of Credpal, a Lagos-based fintech company that specializes in loans. They told us how they started the company and the journey so far. Enjoy.
Great. So I'm Fehintolu Olaogun. I'm CEO and co-founder of Credpal.
Olorunfemi Jegede, COO and co-founder of Credpal.
Whenever I interview a company that is founded by more than one person, I always like to know when each of them realized, like, I need this person to be on my team for us to found this thing together. So when did that happen for the two of you?
Well, before we founded Credpal, we've known each other for a while, right? We worked together at a company that I previously founded, and one thing is that entrepreneurship is partly instinct, right? Where you see problems and you want to solve the problems, right? The same problem that we faced, when founding Credpal, a lot of people have been facing it, but no one thought to solve it, and when we discussed about the problem, which particularly was about people having to pay in full for everything you want to buy, right? You want to buy a laptop, you want to buy a phone, you want to buy furniture, you have to pay in full for it. While in developed countries, you find where you can get installments, payment options for pretty much anything you want to buy. Even for food and coffee, you can use a credit card to buy it. So you can pretty much, live, a comfortable life, and pay for what you're using, in a convenient and flexible way. Right, so that issue was that was a big problem for us and also for customers, who were using our services at that point. Right, he then had an e-commerce site, where had a lot of items on the e-commerce site, and a lot of customers were asking for installment options of payment. But before then, it was like, no, I don't offer installment payment options. Right, but when we saw that huge problem and we saw that we could actually solve it, we tried to go on the journey together.
Well, I think in addition, it's just like, I think a lot of time what inform co-founding is when two people meet and they're both passionate about a particular problem, right? So like the whole idea of the whole inspiration of Credpal actually came when we were discussing. And when we got to that point, we just both wanted to solve that problem, and so it was natural. He was excited about the problem, he wanted to solve it. I was excited about it. I wanted to solve it, and so it was just,
Okay, so the next question is for you. Is there anything that happened prior to the formation of Credpal that nobody knows, that is not in the news, nobody knows about it? Is there any such thing?
Of course, I mean, there are a lot of stuff. I mean, Credpal actually wasn't our first attempt together to try and build a business. There was one that actually was very short-lived, say 3-4 months. So there was something we're trying to do. Then we're trying to change the old model of how people make purchases, literally of thrift items, and it was just like, we think it was ridiculous that people go to the market and go to pick clothes on the floor and all of that. So we thought we could create a platform, an e-commerce platform whereby they could put this kind of accessory online, at a very affordable cost, and customers could go to this platform and shop, right? The fact that you want to wear thrift doesn't mean that you have to pick it up in Yaba Market or something. You could still order it online, cheap, affordable, but it will come a lot more decently and all of that. But for whatever reason, I think at the end of the day, by the time you look at the cost of technology invested and all of that to actually make this kind of business scale, it wasn't really competitive. It wasn't working. Customers still want to come online and pick those clothes for 200 naira. They still want to pay 300 naira. How do you balance all of the investment with how much customers were willing to pay? So we had to drop it.
Let's talk a little bit about the challenges that entrepreneurs face. Normally we talk about those that are doing general business, people that are manufacturing. We hardly ever talk about challenges that tech entrepreneurs are facing. And I believe there are challenges. So could you tell us, let me ask you, could you tell us one of such challenges?
Yeah, there are a couple of challenges. So one thing I'll say is that as much as tech businesses might look like there are different types of businesses, we're all one and the same, with every other business, right? We'll still face all the challenges of having initial capital. In most cases, you're actually selling a commodity or a service that could have been sold without technology, right? So in that real sense, even the operational hassles of running the day-to-day business outside of technology is there, right? So you look at all the challenges that you're going to face. For instance, like I said, raising capital, getting the right hands to work with you, building up good business models, to run the business with, and all of that comes with it. Now, on the tech side of things, so technology actually makes you scale that business a whole lot faster and easier, which means that rather than for you to keep doing things manually, you can automate, you can scale, you can grow at an alarming rate, right? And it solves a lot of problems too that normally you might not be able to solve with traditional model of working. So that in itself also brings challenges too, right? Because you then need to have a bit of expertise. So it's either you as the founder have some technological background, right? And you can maybe program or put together some code, or you have to get someone to do that for you. And as it is right now, that's also getting a bit more expensive. Getting technical talent, even paying for that initial cost of some services, might be a bit high. So I think for most tech businesses, we all share that similar trait of just having a bit of a challenge of setting up a business. But the beauty about technology is the fact that because of its high growth potential, you are more confident of putting in more money into your business, right? You're more confident of saying, oh, I can go ahead and do this thing, and because I have tech backing me, I have all of these things like my app and all of that, it's going to grow a whole lot faster than if I'd done it outside of a tech space, right? So I think we share almost similar challenges, and then you have to also couple that with having domain expertise, both in technology and in what you're trying to solve for. So it's maybe a bit harder in a way.
Okay. So speaking of capital,
okay,
it's been like 6 months now since you raised $1.5 million. What are some of the good things that have come out of that capital raise? Like one of the things that you've done with the money, could you tell us?
Oh, well, I'll say that some of the most exciting thing we've been able to do since our raise is actually innovation of new products. Of course, there was an initial overhaul of our entire product, to make it a lot more customer friendly and competitive and all of that. And there have been new line of product as well that have been deployed. Basically, that it's actually going to allow us tap into new market segments. I think those are some of the interesting things we've been able to do with the capital. Also, I would like my partner to speak more to that as well.
Yeah, then regarding the team, for instance, we've been able to grow the team a bit significantly, which means that we can handle more customers now. Building out new products, like you mentioned, comes out a whole lot faster. There's that breadth that we have now to do a whole lot more, increase capacity. And then the most important part is we're better positioned to serve our customers, right? Be it in terms of supporting them, giving them better services, and even offering them better incentives. Right now we're going to be partnering with a few other businesses, in our space or outside of our space, right, to further drive, a whole lot more value to the ecosystem. So I'll say watch out for what's coming.
Yeah, it's just really
any prospects to raise more funding in the future?
Yeah, absolutely. I mean, it's typical for startups generally. You want to go from your pre-seed to your seed round, and from your seed round you want to do your Series A in an ideal situation. Sometimes you want to do a bridge capital. I think Credpal is getting to that point that we're beginning to we think we're ready for a Series A. So in the next couple of weeks or months, I think officially we're going to commence our Series A round, considering how much how far the business has grown. And
Okay, so this next question, I would like us to deviate a little bit from Credpal and talk about Yaba. What is it about Yaba that attracts so many tech
entrepreneurs? Yeah.
What is it about this place?
I think the first thing is, well, it might be a bit of coincidence, but some companies started out from here very early on. I'll give credit to like CC Hub, for instance, right? We started early in Yaba, and one thing that helped grow the ecosystem is the fact that we have two institutions close to this place. We have Yaba Tech, you have University of Lagos. So getting a group of young people, talents, who wanted to build stuff and build a lot of tech stuff, was quite easier as opposed to going somewhere further. Right, so I think it's kind of like catalyst that initially started the movement, and also in terms of proximity to, Yaba is like at the middle of Lagos.
It's central.
It's central, where it's easy to get to the mainland, and then the island is not so far from here, right? So it just sounds like made sense for tech companies to just find that kind of up, spot. And the best part of technology is the fact that you don't really need to be where your customers are, right? So which means that if you can find a place that is good for you, that has a huge supply of talent, because talent is what you need the most. Like you rather want to be closer to your developers, in the real sense, right? And people that are going to be working on your product. So at the end of the day, most tech companies will look for the best place that would suit them growing the best talents and growing as a company, while they make technology that would then reach out to their customers wherever the customers are across the entire world.
So you've been in this business for how long now? When was Credpal founded?
Yeah, so it's about like 2.5 years now.
Okay. So based on what you've seen over the past 2 years, how profitable would you say fintech business is in Nigeria right now?
I don't know. Like if you say, like when you say profitable, it sounds really funny. I'm not sure it's a common term in startup space generally, right? Because it's like, because when you're thinking profitable, you're thinking ROI and all of that. And saying how profitable fintech business is like, I mean, it sounds very traditional to me, because it's a very, very different play entirely, right? But then ultimately, to answer that question, would consider what does fintech really means and what product or services do fintech businesses offer, right? So a good example is, payment processors, that allow customers, allow businesses accept payment. That's a typical example of fintech product. There are a couple of other saving products out there too, which are typical of fintech products. Another is credit, consumer credit, which is where we're actually playing actively, right? So you're looking at this product, then you're looking at the pricing model of this product. Well, I would say that it's profitable and actually very profitable, but in the sense that if you build an amazing business, fintech product can be really profitable, but it gets really profitable at scale. And the reason is that a lot of time, in order to be very competitive, technology businesses margins are very, very tight, right? So you're playing on a very tight margin. So basically, you're playing the numbers game to really, really make decent profit, and that's why you're leveraging technology in the first instance, because technology allows you to serve a really huge market. I mean, you could literally build in Yaba, do everything in Yaba, Lagos, and you're serving the whole of Nigeria, you're serving Africa, you're serving the whole world. I mean, there are a couple of Nigerian fintechs today that are serving businesses across the world. And when you're playing at that level, trust me, it's really profitable. The profitability is really in the brilliance of your technology.
Yeah, so what I also like to add is the fact that, in the financial space particularly, one thing that really stands out and makes it quite profitable business as fintech is the fact that, financial technology or finance in itself is connected to everyone's lives. Like there's no one really living that doesn't need to spend money every single time of maybe the month or the year, right? And that in itself makes the business one that has arguably the largest customer base, right? Unlike other businesses that maybe, for instance, if you're in ride-hailing, for instance, it's only those that are trying to get from point A to point B and they need to serve, right? Or in food, the people want to eat at that point, right? But in fintech, it's every single person in most cases. That's one. The second part is the fact that because most of your product is digital, right? Most fintech businesses use rails and gateways on digital platforms, which means that you're moving money from point A to point B all digitally. It means that you have less need, for lots of other moving parts, that other businesses might require.
Some cost.
Yeah, some cost, right? So it's easy for you to build, right, and grow at a massive scale without having to really have too many other costs to it, right? So the initial cost might be high because it takes a whole lot to set up all the regulatory compliance staff infrastructure. But once you can get all of that right, then scaling it is pretty much easy, right? So that's why I see, most of the most successful companies, particularly in Nigeria, are fintech companies, right? You see Florida Wave, you see Paystack, these companies have built infrastructure that in months, it grows 10x, 100x, with almost the same workforce and almost the same tech stack, right? So I think one thing that makes fintech stand out is that huge growth potential that comes with it, and that's why investors are betting on it, and even on the long run, it becomes a whole lot profitable business. But like Olorunfemi said, right, the key thing here is the fact that, scaling the business and growing the business is where the juice is, right? Not just in that initial profitability like in traditional business, but in the fact that if I hit 100 million transactions on this, then it's huge. And get 100 million transactions is quite easy because every single day people are spending money, right? And I mean, everybody is spending money every day.
What are 6 things that somebody needs to start a fintech company that will end up becoming successful? So you take 3, while you take 7.
Okay, so I go first. We're in the process of building a successful business because ultimately the first question is, what's your definition of success, right? Is it building a product that is actually valuable, that customers find valuable? Is it building a product that customers actually love and the demand is really there? Or is it all about your bottom line? Is it about making a lot of money, right? Or is it about building a product that actually solves real problems? So that's the question. So what exactly does success means for you? Like I said, for me, particularly when we started this business, one of the things that really motivated us to start is that, I had a presentation earlier, which I did for Diamond Bank then. And what I said is that our ultimate goal is we're seeing a future whereby every Nigerian can literally walk into a store and buy on credit, literally to aid their quality of life and ease the financial burden. Trust me, quality of life is very low in Nigeria, and living here can be very difficult. And that's because a lot of things are not done the way they should be. So for me, in that sense, trust me, in the next couple of years, when this dream becomes a reality, I could actually mean success for me. So the question is, what's the definition of success here? But then, if I'm just going to go with the standard definition, what we're used to in Nigeria, saying a business making a lot of money, or say a business that is widely known and, of course, profitable. If you're saying that, what are the 3 factors that is important? Well, first, I think the first thing I would say is building a product that actually solves real problem. Today there are a lot of wannabe solutions out there. Fintech is the whole thing now. Startup is the old thing now, and everybody is building a startup. Everybody has a fintech idea, but I don't really think that's a good way to go. The question is, you have to build a product that solves real problem. Have you been able to identify a serious pain point of the people? Do you have ideas, innovation around how this problem can be solved? Then you're good to go. So the first one is, you have to build a product that solves a real problem. 2, trust me, your customers is what determines if your business is going to be successful or not. And of course, it's a very old saying, but it's funny that somehow people still don't take it seriously. Customer is king. Ultimately, it's not enough for you to build for your customers. Do they connect with your product? Do they love it? It's very important that customers love your product. And what's the yardstick for customers loving your product? Are they talking about it? Are they referring people? Are they recommending it? Do their life get better because they know about your service and they're using your product? So first, you want to be solving a real problem. Next, you want to build a solution good enough such that your customers love it. They're hooked to it. The third one, well, I would say that having a decent domain expertise in the sense that, again, like I won't just wake up tomorrow and say, oh, I want to go invest in aviation because I don't know anything about the aviation industry, right? I think it's just a standard rule of business that if you want to venture into a business, it should be a business you're quite knowledgeable about. And that way you're coming out of the box with a lot of understanding, with a lot of skill set, which will help you navigate the really, really complex and challenging world of business. So, thank you.
Yeah, I guess it's even said like 2 or 3 of things I want to say, right? But what I would like to add to that is the fact that the first thing is largely around how you're solving the problem you're solving. So for most cases, you find that for every problem you're trying to solve, someone else is trying to do something about it, right? So before the guy said people didn't buy money, people were trying to use other forms of payment, which are highly inefficient. Before ride-hailing became a big thing, we had some companies that would tell you to call in, they put a number on their cabs. So in reality, problems are there. People have tried to solve those problems. So the biggest challenge will be how are you trying to solve them, and is that solution a sustainable and scalable solution, right? So that's the first thing. So identifying a problem and being able to find the best solution that makes it work, right? Because trust me, other people have been trying to do something similar. You hardly find any industry where you're going to be the first person to do anything about that industry in a real sense. So I'll say that's the first thing that one needs to really look out for, being able to solve those problems, right? The second, we'll touch on the domain expertise that Olorunfemi already mentioned, right? It's quite important that, for technology, you need to have two domain expertise, in two separate, or maybe even be the same, depending on what you're trying to solve for. First is in technology itself, right? Which means that at least you must have a very good, either a developer or strong tech person in the founding team of the company. And the second is the fact that what you're trying to solve for requires domain expertise too. So in the finance space, for instance, now, if I don't know anything about finance, like I don't know how money moves, I don't know how things move around in the financial space, it's going to be hard for me as a programmer to just wake up and say, hey, I'm something else. I'm going to find myself either creating a product that might not work, because there are loopholes and maybe some compliance type things that might affect me. So you need to have domain expertise both in technology itself, and also in whatever area you're trying to solve for. Which makes it a bit tricky. And then the last part, I'll say is that for most tech companies, and this always happens, like over 80% of companies pivot, right? So it means that, and one thing that kills a company very fast is not knowing when to change, right? You start off doing something in the first instance and you think, oh, this is the way to go. But in reality, the market always tells you how things should go. Now, if the market reacts to you and you don't adapt your products, you will likely keep trying to sell them the same thing and they won't take it and the product dies. So that ability to respond to the market very fast, and be able to provide, what will really work at the end of the day is very important. And that, like I mentioned, most businesses pivot, and you go to long history of businesses, right? Even the likes of Facebook and co, took pivots along the line. Facebook was supposed to be just for universities and a small community, for instance, right? But obviously now it's something that everyone uses across the entire world without no restrictions, right? So being able to adapt, and that comes with you having very good instincts, and it's part of what sets you apart, as an entrepreneur, on the journey. So I think for me those are the key three things that you need to have. There are a couple of other things I wanted to also add too, but I feel like with this, like it sets you at least one step ahead in your journey to building a good fintech company.
Nice. So currently, in Nigeria, the fintech space, the tech space generally is very, very saturated. Like you mentioned, people wannabes, and even people that are actually doing the real thing. So it has created serious competition. How do you navigate the challenge, the competition? What stands you apart from the others?
Yeah, so I think as Credpal, right, as much as we might be in this lending space that a lot of other people are, right, our product is uniquely positioned. And I'll start from where we started out from first. We were the first to mainstream buy now pay later model in Nigeria, where we built out a product that essentially allowed any kind of merchant. We're talking about both the phone vendors, furniture, and everyone to offer buy now pay later to their customers. So before now, we had loan companies, right, who would give out loans, but no one was really giving out loans at the point of sale on a large scale. Okay, so you being able to identify unique untapped markets within a saturated space is very important for us, And going forward to now, with the launch of our credit cards too, we also saw, an even bigger opportunity, and that's the fact that beyond you even allowing people to go buy a phone, buy a laptop, and pay in installments, you need to also spend that same credit across multiple merchants, right? You could be trying to buy coffee, trying to buy food, trying to buy anything, right? So in the real sense of it, what we've done is that we've taken credit as it is, which was quite traditional before, where people were giving out loans, right, to where customers need to spend it. Because ultimately, if you get money today, you're going to spend that money somewhere, right? You can't get money and put it under your bed, right? So the only people that we don't compete with are like the savings products, where people are going to go and save money. But our focus is making people be able to afford to spend their money, right, even when they don't have the money, because they're going to earn it later. Most people earn money monthly, right? If you're trying to buy a car, why do you have to pay for that car? At once you're going to be driving that car for maybe 1 or 2 years at least, right? So being able to spend money conveniently is our core focus, right? And like I said, it goes beyond us. It goes beyond just credit, giving out loans. It's about you putting credit right where the customer wants to use it, right? And that's what kind of like sets us apart. And I think for most businesses too, even in saturated space, while everywhere might look saturated, everyone finds their niche market and distribution channel that is unique to them, if we've done, and we're trying to grow that very, very fast.
Well, I totally agree with what Fehintolu has said already. It's all about positioning, unique positioning at the end of the day, right? As much as I wouldn't say saturated, but as much as the ecosystem looks really busy, I think that there's still a lot of unique opportunities in the space, and that is where positioning comes in. So when you're trying to enter into the space, you're trying to define what is my unique proposition, and that informs how you position yourself in the industry, and that's exactly what Credpal has done. So I wouldn't really say saturated. I think Nigeria as a whole still has a need for a lot more opportunity, a whole lot more solution, and could come out from any sector, insurtech, agri-tech, fintech. So the ecosystem is active, is busy, but not saturated.
Let's talk about the regulatory, all the regulations that have taken place this year. Targeted at tech companies, fintechs, and other companies in the tech space by both the CBN and SEC. What do you have to say about that?
Well, I think first of all, I'll say I believe CBN didn't have negative intentions when implementing the policies. They had seen some things, that caused them those policy changes, right? Which on their part is part of their job. The only part that I felt a bit negative impacted about is the fact that these policies came in, first of all, very shortly. For most of the policies, we had little time to react, right? Which I think, in itself isn't so good, right? And the second part is the fact that these policies could have been further reviewed and I don't know what to use, but should have been better, should have more collaborative, especially with fintech players in coming out with these policies, right? Which means that, there should have been some form of forum or a stage where everyone can voice their opinions, right? Because as much as CBN maintains the right to regulate the space, right, the success of what they are doing is in terms of the businesses they're regulating. Like if you regulate business and you kill all of them, then there's nothing to regulate after that, right? So I think what was missing is the fact that there should have been a lot more feedback, from the tech ecosystem and the fintech ecosystem particularly before those policies were made. And if at the end of the day they decided to make those policies, there should have been more time, for companies to react and readjust, before those policies were made. And I think those two factors negatively impacted us significantly, but ultimately, right, as a business, you have to find ways of, adapting, surviving, but notwithstanding the effect, were negative, on most companies that it affected.
Yeah, that's pretty much it. I would think that regulations generally should be more collaborative, basically for all the stakeholders, that are playing in the system, right? Because eventually they get affected by all those regulations. And it's almost impossible to say they have an entire perspective or get an entire picture from just one angle. So adopting a more collaborative approach would allow to have a whole lot more comprehensive picture, which also now naturally would enable more better regulations for all parties involved.
What is the most expensive thing that I can buy on credit using Credpal? And what security measures do you have in place to make sure that when I buy on credit, I actually get to pay the money back to you?
Well, I'll say the most expensive thing you can buy with a Credpal. So today, you can buy a car. I mean, you can access facility up to millions through Credpal. And so whatever you choose to do with that. Right, so talking about collateral and security measures in place, of course, we are a forward-thinking business, again, so we don't take collaterals, right? But then in terms of security, I'll say that the bulk of our security comfort in terms of how this facilities perform is likely embedded in our technology, right? So today we've been able to leverage a whole lot on data, financial data, and a lot of older data to actually, come up with really, really decent underwriting models. And so far so good. It's proven very efficient. As of today, our facilities are doing very well, and meaning the customers are actually performing well. Also, I think that one of the things that has been majorly helpful is the credit bureau. It's a very, very important asset, and thanks to the government for compelling players in the industry to report our customers' performance and all of that, and it has been very, very valuable, right?
Yeah, to add to that, right, to the point, it's really, we cannot, as much as you want to try to ensure that every customer, gets credits, right? You cannot give everyone credits. That's the first thing, right? So some customers are going to apply and you're going to deny them for various reasons. Bad character, not having capacity to pay to. Like if someone that earns, say, 50,000 naira per month wants to buy a car or 50 million naira, that obviously will not work, right? So, so the first thing is that we have a thorough process of underwriting the customers to be sure that they're eligible for the loans, and then coupled with what Olorunfemi already said, we then work with several data sources, data points, to then assess the customer before we avail that loan. So the key thing about it is that once you give out loans, good loans, you likely get most of the money back. Right? It's when you give out unreasonable loans or loans that are not exactly good, that you have problems, collecting back at the end of the day.
Okay, so talk us through your expansion plans, because every company wants to expand. Like in the next 5 years, I want to expand to Ghana. I want to expand to Kenya. Could you tell us a little bit about that?
Well, I'll like my partner to speak to that. He's the CEO, so.
Well, one thing is said, like our mission, right? Our vision speaks to that a whole lot. We want to be the largest consumer credit brand out of Africa. So it means that first of all, we have to decently cover Africa, right? So we're first of all targeting getting to other countries in Africa, and beyond that, we want to get to other emerging market economies across the entire world. So for us, which is why, into the point of fundraising, like the funds we require to even do all these feats is still a whole lot more, right? So for us, our goal is to go Pan-African and then go global, at the next stage, right? And then even within Nigeria to be able to provide to a very wide range of customers, right? From the fully employed customers, to the self-employed, to the business owners, right? Having that huge spread, so that everybody in Nigeria at least can have Credpals and products, right? And also beyond even giving our credit to, we could, venture into other forms of, because we're a very dynamic company, right? We could offer other options for them to access our products, and they maybe later get credits on point, right? So the goal for us is to ensure that we cover, first of all, the Nigerian market fully, right? Go across Africa, and then ultimately go across the entire world.
Absolutely.
Okay, so most tech companies, especially those that play in the fintech space, they have plans of becoming super app. I think that's what they call it. So that you are offering your primary product is payments. But you're offering other services like what Pay was trying to do at some point. Do you have plans of doing that? Maybe incorporating e-commerce or something like that? Do you have such plans?
The saying that one size doesn't fit all is actually, I think it's an old saying, and which we pretty much believe in. And focus is actually very important. You can be everything to everybody, but you could be whole to some specific kind of customers, right? So as much as possible, we would not want to stretch ourselves too thin by scaling or expanding horizontally. Instead, we want to go deep, really deep, vertical, right? So our focus will be to grow to grow strong hedge, defensibility hedge in our core area of expertise. So to that effect, I would say that yes, we've got quite an array of products in our pipeline, but then we wouldn't try to do everything. I mean, it makes no sense to do that.
So final question, which I'll be asking both of you. Let me start with you. So people believe that the tech bubble will soon burst. Do you think that's true?
It's not true. I think it's not true. And I'll tell you why, right? So the first part is that you have to ask yourself the first question: are we offering value? Right, that's the first question, right? Tech is offering significant value. Like I'll give an example of ride-hailing companies. You know the popular ones, right? Like Uber and Bolt, right? Before Uber and Bolt, there were lots of small taxi companies up and down, right? They came in, they gave us a better solution that offered far better value, and trust me, that's not going to go anywhere anytime soon, right? So in most cases, right, technology offers superior value to traditional means of doing things. So what we should be more concerned about is what's the effect on the traditional businesses, right, which might be negative, like in the case of taxi industry that was affected significantly. But technology itself will always drive the future of any economy. So the tech bubble will not burst, I believe, right? That's my opinion, right? But on the other side of things is, we could then consider in some markets what they call corrections, right? So corrections would be maybe things don't go entirely out of hand, right? Which for now, we feel for now hasn't happened, but it could happen in the future where things could become overpriced and the market has to forcefully correct itself. But in itself, the essential value that technology provides, will never change. Whereas Credpal, we're providing value to our customers, and our customers love that value. And even before Credpal, a lot of them didn't want to use credit in the first instance, right? But the idea to be able to buy at the convenience, at your convenience, was already changed the game for most of our customers, and that will not go anywhere anytime soon. So I think the key thing here is that by giving value to the ecosystem, to the country, to the economy, and we brought in a lot of innovations that has opened up different markets, across the entire country. So I feel that won't bust, but possibly maybe in the future there might be overvaluations and all of that, and that could be affected. But as of now, I don't think that's much of a concern.
Yeah, I mean, I'm gonna be speaking exactly to what Fehintolu already mentioned. And when you talk about bubble, the first thing I'm asking myself, or the first thing I want to ask people is, are these businesses, are these companies actually providing value, right? And naturally, there's a degree of success that follows value, and are these businesses offering value? If you look around the world, 2020, the COVID pandemic struck, and a lot of businesses, it really crippled businesses. Businesses went down, and it was so evident on the stock market. Like the entire stock market literally crashed, at the end of March and all of that. And the businesses or stock that performed the best, that recovered the most, were tech stocks, right? A few weeks after the whole crash, the whole came, roaring back, and they rallied back up. And the question is, why is this happening? Obviously, at that point, there was only one place to put your money, the tech companies, because they were the only one that could still operate, even in the pandemic, right? I mean, the pandemic didn't stop you from watching your Netflix, it didn't stop you from using Google, it didn't stop you from browsing, it didn't stop you from making payments online and all of that, right? But the typical brick and mortar businesses, even really huge ones, but the typical brick and mortars, like say, even your Toyota, couldn't operate, and they were really affected, right? So ultimately, technology has some inbuilt mechanism that makes it naturally very valuable and very resilient. And so I think the value that tech businesses offer is apparent, and I think that is why it looks like there's a bubble, because a lot of money is coming into tech. But I don't think it's a bubble. But like FT rightly said, eventually things might get overpriced, and naturally the market will be forced to correct itself. But then it's not because it's a bubble, kind of.
Any last comments from both of you?
Yeah. One thing I'll say is, especially for fellow entrepreneurs, right? We're in a country where things are very, very unique, right? And that being said, the key thing I always tell people is the fact that you just, as a business person, right, as you being an entrepreneur, problems will always surface. In fact, you're in business first of all because there was a problem in the initial phase, right? So don't always see new challenges as a stumbling block. Right? Never lose that spirit, that edge of you always trying to adapt to make things work. I'll give an example. Overnight, they suspended BVN services for a lot of fintech companies. That was just like in less than 24 hours, right? And today our services are back up, a lot of services are back up right now, and we found even better ways of even serving our customers without that service, right? So it's just like a word of, encouragement, to fellow entrepreneurs that Chinese will always come. It's part of why we're in this business, but just keep up that spirit of being able to overcome them and innovate at every single point in time. So that'd be my answer.
Yeah, my last word would be going to aspiring entrepreneurs, young Nigerians who really want to do exciting stuff, like it's happening in the Nigeria tech startup today, tech ecosystem today. And my message to them will be, I think they can do it, and I think that they should actually come on board. Like I said earlier, the whole lot more problem, in the country, in the continent that we're trying to solve. And I believe that we definitely need more players playing in this field. And one thing that I've seen in the past is that the difference, between the average Nigerian youth who's probably running a small Instagram business and the typical tech startup founder who's, in code doing a lot better is just a perspective. It's not really about the idea, because I believe that every idea could actually be made big, right? You could run a fashion business on Instagram, or you could run a furniture business on Instagram, just small scale. But that same furniture business could be scaled to the size of IKEA, and that same Instagram fashion business could be scaled to the size of a product, right? So the question is all about the perspective. What can you say, right? So I think interacting with Nigerian youth, I think what our people just need to do, or what we really need to do, is we have to think big, and so whatever you're doing, you want to think big about it. Like, how can you literally scale this? How can you leverage technology? How can you leverage distribution network? How can you leverage a whole lot of those things? So that is what makes the difference between a guy who's just running a side business as an hustle and a Nigerian who is running a typical startup and is attracting millions of dollars in investment all the time. So, young aspiring entrepreneur should think big. They can do it. I think that the country were very talented, and I think that a lot of people are actually capable of building decent businesses.